because about 2 weeks ago, TD Bank in Canada came out and they said something. It says, "We enter short spot silver anticipating a dramatic reversal in prices as silver's devilish blow-off top comes to completion." They entered a short position in silver futures first week in January, and betting that the price would fall towards $40. But they placed stop losses at $92 to limit losses if the price went the other way. Last Friday, they were stopped out of their trade at a big loss, and they're massively short. So through rhetoric and through their own actions showing the public this is what we're doing, well, they tried to push the market lower, and they got...
Markets rarely whisper before they scream. And right now, gold and silver aren't whispering. They're detonating. Silver has blasted through the once unthinkable $100 level. Gold is charging toward $5,000 an ounce. And yet mainstream financial media is almost completely silent. That silence may be more important than the price action itself, because beneath the surface, something far bigger is unfolding.
I had this on your show for the last several months, that every single month for the past 15 months, 16 now, we've seen record demand or deliveries into COMEX. In the month of December, the December delivery contract for silver, 68 million ounces were delivered into COMEX. So someone stood for delivery to 68 million ounces. That's the largest December delivery in the history of the COMEX. Another 3 or 4 million ounces of gold on top of it. You're talking billions and billions and billions of dollars. So far in January, which is a non-primary delivery month, we've already seen roughly 40 million ounces or more of silver delivered. So in the last 45 days, you've seen 120 million ounces of silver delivered into COMEX. Don't tell anybody.
That's right.
And 5+ million ounces of gold. But this is every single month. And I've been saying that on your show every single time. Who's doing it? Not a word by the mainstream, not a word by the independent journalists or the financial media. To me, it is the biggest story. Hundreds of billions of dollars being brought into the United States in gold and silver by people who do not do it for the hell of it. And at that level, they know where this is going, and that's why the deliveries are all that matter to me. It's true. It's just all that matters to me, because these people at that level doing billions and billions and billions do not do this if they don't know where it's going. It's a very interesting thing, because Tom Luongo has a theory that Trump is out to get the old money, that he believes, and he talked about election interference in his speech at Davos, and he believes that they were behind it, that they were behind the election interference and the color revolution. And some interesting revelations have come out, as we've talked about on COMEX, where the Economic Times says the U.S. banks, the 5 that were in collusion with the European and the Canadian banks, have flip-flopped and gone net long, leaving the Canadian and the the European banks net short, exposed, which is interesting because about 2 weeks ago, TD Bank in Canada came out and they said something. It says, "We enter short spot silver anticipating a dramatic reversal in prices as silver's devilish blow-off top comes to completion." They entered a short position in silver futures first week in January, and betting that the price would fall towards $40. But they placed stop losses at $92 to limit losses if the price went the other way. Last Friday, they were stopped out of their trade at a big loss, and they're massively short. So through rhetoric and through their own actions showing the public this is what we're doing, well, they tried to push the market lower, and they got hammered. And you look at it again today, it was down when I woke up this morning. Both gold and silver were way down. Gold was down $50-$60, and now gold is up $85 and silver's up $3. We are at, holy moly, we are at basically almost, over $96.50 on silver and almost $5,000 on gold, $49.20.
That's crazy.
So
it's crazy.
It is crazy, and it continues. Will you put it in context with the massive deliveries that we've seen? Who's delivering it? Who's paying for all of this? And maybe the people at that level want to reposition before they let all of the people that we're all talking to get it. Now, the people that we're talking to all have gotten it for a long time, and but the rest of the crowd, you talk about the S&P 500 up 19% or so last year in the face of the greatest AI tech boom in the history of the stock market, maybe next to the advent of the internet, and gold eviscerated it up 70%. So that's what? three and a half times better performance, and silver up 150%. Well, you're talking 7 times the performance, and not a word about it. And at the same time, any journalistic integrity at all would say, who the hell for 15 months has been bringing all this into COMEX where
That's
this
right.
never happens? So yes, it's been going on that way forever. And for whatever reason, gold, I guess, and silver are the antithesis of the system. And even if the system was in the midst of a reset or a transition, and there were white hats at the helm, the white hats need to transfer too. They need to reposition. Whoever it is that is doing this and not letting the information out, I don't know, is it the good guys trying to allow themselves to get in a position to make this country strong? Or is it the bad guys wanting to hang on to, to the old system? But the very fact that gold and silver are not spoken about on the mainstream is absolutely pathetic.
For decades, silver was dismissed as gold's volatile cousin, useful, but secondary. That narrative is breaking down fast. According to Andy Schectman, president of Miles Franklin, the futures price no longer tells the real story. The only metric that matters now is delivery. And the delivery data is staggering. Over the last 15 consecutive months, every COMEX silver delivery period has either set records or come close. In December alone, a record 68 million ounces of silver were taken for physical delivery, the largest December delivery in COMEX history. Add millions of ounces of gold on top of that, and you're talking hundreds of billions of dollars changing hands, not on paper but in real metal. January, which is usually a quiet, non-primary delivery month, has already seen roughly 40 million more ounces delivered. That means in just 45 days, over 120 million ounces of silver have left COMEX vaults. This is not speculation. This is capital committing at scale. At the same time, institutions betting against silver are getting crushed. A major Canadian bank publicly shorted silver earlier this year, expecting a collapse toward $40. They even set stop losses at $92, just in case. They were stopped out at massive losses. Not because of hype, not because of retail traders, but because the market simply refused to go lower. Every attempt to suppress price collided with one immovable reality. Someone somewhere is demanding physical metal, not cash settlement. What makes this even more telling is who's repositioning. Data suggests U.S. banks have quietly shifted long, while European and Canadian banks remain dangerously exposed on the short side. That's not reaction. That's foreknowledge. And look at performance. During the greatest AI-driven stock boom in history, the S&P 500 rose about 19%. Gold surged 70%. Silver exploded 150%. 7 times the performance, and barely a word from financial media. Gold and silver are no longer trading as commodities. They're trading as signals. Signals of stress in the fiat system. Signals of capital rotating away from paper promises. Signals of a market preparing for a monetary transition. And markets that scream while being ignored don't stay ignored forever.
That's not James Rickard saying 24,000. That's not Mike Maloney saying 10,000 gold. Van Eck Funds is a mutual fund company. And I want to read something to you real quick. It says, what if, this is written by Van Eck, okay? What if gold replaced the U.S. dollar as the reserve standard? Now, my view is that these countries, and even when Lutnick says we're moving away from globalism to mercantilism, that means everyone uses their own currency and trades with one another through their own currency. But so my feeling is that gold will replace the treasury, the reserve portion, not the dollar won't die, but in terms of what people hold their reserves in across the globe, it will be gold. So they say, what if gold replaced the U.S. dollar as the reserve standard? In this paper, our emerging markets bonds team values gold by matching central bank money liabilities to reserves, implying a $39,000 to $184,000 per ounce price. I'll get to just the highlight. If they use M0 is the monetary base that everything else is built on top of. It's the dollar. It's cash in the system. It's immediate cash in the system. It's the base money supply. And if it was M0, liabilities divided by gold reserves equals $39,000 per ounce weighted by daily FX turnover using M0. It says central bank M2 money supply liabilities divided by gold reserves equals $184,000 per ounce. And I'll just read this last piece. It says using global M2, where we have a global series unlike for MO, we calculate the global price of gold that equalizes M2 is around $100,000 per ounce, weighted by daily FX turnover for our sample. The gold price that equalizes M2 is $184,211. Now, I'm not saying that's going to happen, but what have I been saying on your show forever? I think they're going to, as Judy Shelton told me, back the back end of the bond market with gold. So if you sell someone a 30-year treasury that's redeemable in gold with zero interest, well, that means you can bring back manufacturing at zero interest. You need to pay the holder of that bond $30 million in gold. At today's rate, let's say $5,000, what's that, 6,000 ounces? So you need 6,000 ounces to pay that back today. But what if it's 184,000 in 10 years or 8 years, whatever that is? So you take 30 million divided by 184,000. Now you only need 163 ounces instead of 6,000 ounces. So if you let the price of gold go higher, and relinquish the reserve standard, not only do your pegged bonds, you have to barely give any gold up from today to then, but the rising gold devalues the dollar, and that's how you sell stuff to the world. That's what everyone has done to us by devaluing their currency against ours. That's Triffin's dilemma. I think this is what he wants. And right. Well, they were trying to, in essence, lower the standard of living, and my belief, in the United States and put everyone on equal footing, where, you want to create a serfdom of people who will never vote Republican again, who will be on universal basic income, as we've talked about, or on the dole handouts because they can't afford to live. And that's what we see, the Cantillon effect, in an environment where the wealthy have gotten exponentially wealthier because they have the ability to take the cheap money that has been abundant at zero interest rates for all these years and put it into assets that have gone parabolic. So that's the K-shape. The wealthy get wealthier through appreciation of assets, as the poor get poorer because inflation, which they lie about and say is only 3%, but we know it's closer to 10 or 11% according to shadow stats. It's harder to put food on the table, drive to work, just keep it all together, where the wealthy don't care about that because their assets have gone parabolic. And I don't know the exact number, but the top 1%, their wealth has increased by like $11 trillion in the last year or two. So that's through these types of policies, which it is too stupid to be stupid, but you look at the World Economic Forum type of mantra where, you'll own nothing and be happy and you'll rent. Well, that's what you're creating, an entire nation of people who just can't barely keep it together financially. Look at AI coming in to create maximum efficiency at the expense of millions and millions of jobs. So the wealthy get wealthier and the poor get poorer. These are all things that, God willing, if Trump is able to bring back manufacturing, is able to create more of a mercantile world, he admits that the globalist thing doesn't work anymore. We need to focus on our future in this country. Catherine Austin Fitts, and she's an amazingly smart lady. And I said, is Trump an ally or not? And she said she thinks he was put into place by the bankers to create an environment where the conservative crowd would actually submit to things like a digital ID, and that it's all part of the system, all part of the plan. And whether he is or I don't know, but I mean, these are the same people that I would argue have been behind the military-industrial complex, have been behind all of the things like moving towards a central bank digital currency. In fact, she said to me that a stable coin, which is part of the Genius Act, might actually be worse, because she said the piping, all of these private companies like Tether or the banks that push money into short-term treasuries has to go through the Treasury. And so you have, and that the legislation specifically does not address programmability. Now, we know that they have KYC, know your client, AML, anti-money laundering, KYT, know your transaction, features built into it, but the programmability, like being able to shut you off from your money because you didn't get a vaccine or you didn't pay or whatever, because it's all routed through one.
The question investors need to ask is simple. If this were just a speculative bubble, why is the smart money insisting on delivery? If you found this breakdown valuable, make sure to like, subscribe, and share it with anyone watching gold and silver closely. Stay informed, stay balanced, and I'll see you in the next one.